first, let's get to the market action. Joining us is Carey Hall of BofA Global Research and Envestnet co-CIO Dana D'Auria. It's great to have you both here. And Dana, I'm going to kick this off with you because, we're starting off the new week in the red here with all the major averages showing some losses, and tech led the way with the weakness today. But in general, recently, we have actually seen a pickup in leadership among the big tech names. So what does that tell us about positioning looking to 2025?
Well, I think as a starter, we know that we're in a risk-on environment since the election. I think there's a lot of exuberance in the market. And, whereas we had some cyclicality going on before, movements into financials, movements into more value-oriented plays, it's not surprising. And certainly with Tesla leading, given the relationship there, it's not surprising that we would see, a rotation back. I also think to a certain extent, it shows, there's breadth in the market, right? That we can move from one set of stocks to another and back, and that you can see strength there. I do think also you got to dig into these different, of course, Mag 7 stocks. I mean, as a group, as a monolith, they're 33%. It's very concentrated, et cetera. But there's, some quality plays, maybe more among some versus more of a risk-on type of a play among others. So big as they are, they're not a monolith, and the reasons for the growth there could be differing, right? Some of them, even I think for years now, have been more of a defensive play for the market.
Okay. Jill, want to get your thoughts on whether you buy into small caps, especially given the weakness we've seen so far this month?
Right. I think small caps are interesting because, near term, maybe we continue to see into year end some momentum, and positioning in the size segment's been pretty light. But I think as we look ahead to 2025, I'm actually still relatively cautious on the Russell 2000. I think mid caps could actually be a better spot because I think there are certainly some positive tailwinds when you think about prospects for deregulation and, cyclical growth picking up. But some of the post-election policy risk around tariffs or around immigration reform could actually be a much bigger hit to small cap earnings than to the other size segments. And that's coming at a time when, for one, refinancing risk has reemerged, as we've seen multiple rate cuts get priced out of the market in recent weeks. And small cap earnings have still been struggling to come out of a recession. Going into this year, analysts were expecting that by the second quarter, profits growth for the small caps would already be in the mid-teens and outpacing large caps. And that's gotten pushed out a year entirely. We're still in this profits recession for small caps. We're, likely to see a pickup, but we still haven't seen a lot of evidence that that's actually happening. Estimates have still been coming down in that size segment, whereas they've kind of stabilized and started coming up a bit for mid caps. So we think mid might be the better area for 2025.
Interesting. Dana, given that we're now more than a month into the post-election trade on the Trump win, I wonder what this means for bonds, for fixed income, given that the market seems to expect that maybe rates won't come down at the rate that some had expected because maybe some of Trump's policies that we're starting to get wind of could be inflationary.
Yeah, I mean, you're certainly hitting on, I think, a theme that the market's been grappling with, right? So certainly an expectation, and this market has been for the last year overshooting on expectations of rate cuts. It's not surprising that maybe that had continued to go on. But yeah, when you look at the policies such as tariffs, there's absolutely the possibility of, inflation that Powell really hadn't entirely snuffed out. And already we know inflation can tend to come in waves, being stoked again. And that's sort of the fly in the ointment in everything that the market is looking at right now. So certainly I think it's possible that we're higher for longer. I think, at this stage of the game, given the unemployment rate ticking up a little bit, we're probably looking at a rate cut in December. But, where that end rate lands and how quickly we see these rate cuts, the Fed will remain data dependent. They'll continue to watch what's going on with inflation. And, just to the comments on small caps as well, I think it's right on point that, there's volatility in that, right? And I'm certainly a proponent of small caps over the long haul, but they are interest rate sensitive. They are going to have higher beta to some of these decisions that are going to come out about some of this stuff. So whereas we've seen small caps maybe benefited from things like, hey, not as much international exposure, so the tariffs aren't an issue, there's still a lot in those policy decisions that can flip that. So I think the interest rates and, a variety of things have an impact there.